Welcome to Weekly View on Markets. This week Nifty has closed at 18,027 on Friday. Nifty traded in a small range of around 200 points, that is from 17,800 to 18,180, in that range for the entire week. The Nifty volumes in cash market has also reduced and the range is getting narrower. So what I feel that in the coming days there will be a big breakout or breakdown in Nifty. But by looking at several fundamental factors, I feel that the breakout should be on the upside. Bank Nifty closed at 42,506 with a gain of 0.32%. Bank Nifty also traded in a very narrow range and consolidated during the week. Mid cap index closed at 31,099 with 0.73% loss. Small cap index lost about 1.1%, closed at 9569. India VIX has come to a lower level at 13.78, so which indicates that the fear in the market is at its lowest level. Now let us look at sectoral performance during this week. Most of the sectors consolidated in line with the overall indices. So information technology gained about 2.06%. Uh, Energy sector gained about 1.05%. Oil and gas stocks gained about 1.38%. Realty sector was almost flat with 0.25%. Media sector lost about 4.26%. Consumption and consumer durables lost about 1% each. So the week can be marked as a consolidation week for most of the sectors. Now let us look at the chart of Nifty. This is the daily chart of Nifty. We can see the market is consolidating in a range of 17,800 to 18,200 levels, and the range is getting narrower. This week, the market is traded just in around 200 points range. So this consolidation will end at some point of time and there will be a breakout in any direction. Now let us look at Bank Nifty. Bank Nifty is also trading in a range of 42,000 to 43,000 in a 1000 points range. And this range is reducing over the days. So the chart indicates that there could be a major movement in Bank Nifty in the coming days. This is the daily chart of Nifty mid cap. The mid cap index is trading between 31,000 and 31,800. And here also you can see the trading range is getting narrower. So I expect some big movement to come in the market in coming days. Let us look at the Nifty small cap index. Small cap index, as we look, has corrected from around 9,840 to 9569. Comparing to all other indices, small cap index has lost more and is at a very good level. Many stocks in the small cap sectors have corrected by 40 to 60%. So it is good time to look at small cap stocks which are fundamentally good, having growth potential, and pick them up. So I see going forward there could be a good gain in the small cap universe. Now let us look at some of the fundamentals of the market. Wholesale inflation figures for December 22 has come at 4.95. It has been a sharp decline from around 11% about a year back. Similarly, we have seen last week uh, CPI inflation has also come below 6%. This will give a headroom for RBI to manage inflation without raising the interest rates. It will be good for the markets. One slight bad news is that exports are down by 12% for the month of December comparing to the previous month. Similarly, imports are down by around 3%, but exports are down by 12%, increasing the trade deficit. So, trade deficit is widening, which is a worry for India. RBI forex reserves have improved by around 10 billions during this week and is at 572 billions. So this is a good news as we have built up a sound forex reserves. Crude oil price is stable at 87.66. Crude oil is trading in the range of 83 to 88 levels. Is a fairly stable reason, and government has cut windfall tax on crude for private oil marketers from 2,100 to 1,900 per ton as the crude prices have reduced. So forex rate is at 81.12. During this month, DIIs have been continuously buying. They have bought around 16,182 crores, whereas FIIs have sold 19,880 crores so far in the month of January. So, continuous selling by foreign portfolio investors is keeping Indian markets under pressure. There was a World Economic Forum where most of the industry leaders have met at Davos, and going by the deliberations and the discussions, all major companies across the world have positive sentiment about India's growth story, and they are likely to invest in India in the coming years, so which will have a good funds flow into India. This will help the markets to achieve higher levels in coming months and years. Q3 results of many companies have come during this week, and many more results are expected in the next week. Results so far have been good, especially from IT sectors and banking sectors. So some of the insurance companies also have posted their results. The trend so far has been good, and there will be stock specific moves based on the results in the coming week. So keep an eye on the announcement of results, which will have movement on the stock prices. But overall, by looking at the improving fundamentals of our economy and also the performance of the corporate sector, I have a positive view on the markets. Ultimately, after this consolidation phase, I expect the markets to give a breakout on the higher side. So this is definitely a good time for investors to pick up good quality stocks, especially from mid and small cap, which have corrected more than the large cap. So there are value buying opportunities in mid and small cap sectors. Mutual fund investors should continue their SIPs, and even with 3 to 5 years view, you can put in your lump sum investments also at this point of time. So this is all for this week. We'll meet again next week. If you like my video, please subscribe to my channel. You can share with your friends. You can post your questions, which I will reply. Thank you.